thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. So, if you guys are new to my channel, or my videos, we kind of get into these daily market reports, so that way you can see what's impacting rates on any given day. Sometimes it could be something from economic data that's released that day, or geopolitical, or sometimes it could be headline news that pops up. And if you're on the sideline, you may not know what is driving rates. And sometimes, if you have a little bit of knowledge, you see good news that pop up, but yet rates are acting negatively. You may not understand why this is happening. So we try to bring that information out to you. So if you as a consumer may be looking to refinance or purchase, you get some help you make an informed decision before you decide to lock in or kind of move forward with any mortgage related needs. So hopefully this will be good videos for yourself. If you're in the real estate market, you may want to learn a little bit about what's going on over there, what's going on, and hopefully this will give you a little bit more information as well. Uh, Without further ado, we'll just jump right into it. This week we got inflation data that's going to be coming out with the PPI report and the CPI report. That's going to be important because inflation's been one of the things that we've been talking a little bit about. One of the reasons, obviously, for high Fed rate hikes discussions being brought up, and uh, everything that's occurring, we're getting a much higher inflation. We need to kind of stave that off a little bit with raising rates and everything. So we'll get that data out this week. We'll also get retail sales coming out this week as well, and that will be an important data to look at as to view. So, but today it's kind of light. We got basically just wholesale inventories for the month of November. So in October it went up 1.2%. Forecast called for 1.2% for November, and it came in a little bit hotter at 1.4%. Which is good news, but it's not a high impact report that's going to really help us out here. What's kind of really on the news right now is that a lot of people are kind of, as we're getting into the year, we got the Fed minutes that came out the other week, and that's kind of really what's been kind of hurting our mortgage rates over last week. They just kept dropping and dropping and dropping. I mean, kept rising. The mortgage-backed securities go down, and when mortgage-backed securities go down, that means rates go up, and that's what we kind of saw all last week. For the most part, it kind of hit us pretty good as a result. And the thing that really kind of stood out in that was, we expected about 3 rate hikes, but now a lot of analysts are out there and are projecting maybe even more, maybe even 4 rate hikes this year. They think inflation's getting a little bit out of control. They think the Fed kind of is reacting a little too slow for everything, and so they're being criticized pretty heavily right now as a result. And the thing that kind of stood out, if you guys haven't seen my videos last week, was that we weren't aware of before, was that they're talking about passively lowering their balance sheets. So what that means is that they're going to go ahead and when these securities or the mortgage-backed securities or when these treasuries mature, typically they'll take the money from that and reinvest into more. And basically they're just going to let them drop off and not reinvest. So what that means. So that way the balance sheet drops over time right now. And they think they could get potentially more aggressive towards that as well. And that's kind of what's been driving these. And so we've been seeing a spike in the 10-year Treasury, and that's been adversely affecting stocks on Nasdaq, for example. Nasdaq is high growth stocks, and they typically have higher debt. And when the short-term debt continue to rise, this is what's kind of driving the Nasdaq prices downwards as a result, because there's less profit in there. So let's take a look at what's going on here. Sorry, this is actually generated. This is the wrong one. We're looking at 3.0. This is where we're at. We're currently down about 23 basis points. We were down a little bit further. We did pull back a little bit, and some lenders came in with a little better pricing. That little better pricing is, again, still worse than what it was before than Friday. So we're down a little bit off of Friday here. Let's make this a little bigger so we can take a look here. I did go over to the 3.0 versus the 2.5 coupon after last week's kind of beating. It kind of put us into a different category where it would be more relevant. The 3.0 a little bit more relevant as to the purchasing on these, because these kind of relate to more where the interest rates are at. And since rates have climbed, we're in a higher bracket here, so to speak. So right now we're down about 23 basis points. Pricing is worse than what we saw on Friday. It was even worse than what we saw now because a lot of lenders had to reprice as it regressed a little bit. We were down further probably another about 15, another 10 or 12 basis points, so we were down a little bit further. And as we regress a little bit, some letters came in with slightly better pricing, but still we're off from Friday's pricing as a result of that. And as you can see, we had this downwards trend that's pretty significant here in there, especially after we thought potentially we would have saw a little better pricing with some of the weakness we kind of saw earlier in the week. But unfortunately, it's just those minutes kind of ignited a new flame and it just started taking off from there. Even though long term we know rates are rising, but this just kind of put a little match to it to kind of get accelerated a little bit further here. And here's today's look. Early on, a lot of this had to do with some early competition with corporate bonds, so that's why we saw this drop quite a bit. We had some corporate bonds in there, and people are buying more of corporate bonds than they were in mortgage-backed securities and kind of had a little bit this day. And then once the European markets closed, then we started having a little bit more help in terms of buying. We started finding a few more buyers out there, and that kind of helped out mortgage-backed securities a little bit later in the day as the European markets closed. That's kind of why we saw an improvement in that area. And let's see here. So, yes, and then look at treasuries here. We're up at still testing this level here. It's been pretty tough so far. Hopefully, we can keep that. If we keep that, maybe it might keep a lid on mortgage-backed securities. Right now, we're just under 1.78 currently. Right now, it's on the topper part, but we're trying to hopefully put a lid on it so that way it doesn't continue to go. But right now, it's just under 1.78 for the day. Now let's take a quick look at the national average for conforming loan limits. They do have points built into it, and right now the 15-year is at 2.87, and the 30-year is at 3.64 right now. So if you've been following these, you can see these have been rising over time as well over the past month or so. These have been continuing to climb as a result of that. So hopefully this will give you the information you need. If you guys got questions or anything, please feel free to reach out. We are here to help you guys out, answering questions. We'd love to be able to earn your business. If you're looking to buy, we'd love to get you guys pre-approved, help you purchase your next property, finance it, or even refinance, run the numbers, and help you get what you're looking to do with your refinance. We can certainly come up with a few different solutions if you have some issues and you have some looking for some solutions. We've been known to come up with quite a few different things that help people. We've helped a lot of people in terms of divorce situations, coming up with financing for college for kids or investing policies. So please feel free to reach out anytime. In that regards, we're here to help you guys out. If you guys like these videos, please help us out. We'd greatly appreciate if you guys go ahead and smash that like button and share. We'd greatly appreciate that. You guys have a great rest of your day. Thanks so much for watching, and we'll look forward to see you guys in tomorrow's video. Bye-bye.